Thanks, Wilf. And Brian, thanks so much for joining us right after this news. Now, yesterday, Uber CEO said that the green shoots they were seeing were encouraging, but it was still too early to tell. So what makes Lyft so confident that the recovery you're seeing is more than green shoots, that this might be some kind of inflection point? And I wonder, does that bring your profitability timeline forward once again?
Sure. Deirdre, thank you for having me. Excited to be here. So first of all, Lyft, we were really excited to announce that we had our best week for rideshare rides since the pandemic. And despite the severe winter storms that impacted so many states across the U.S., average daily rideshare ride volume increased 4% month over month. And if you were to normalize for the storms, the growth would have been even stronger. And look, I'm smiling because in the release, we also disclosed that rideshare rides for the week beginning March 15th, so we're talking less than 2 weeks away, we expect to show positive year-on-year ride growth. Mm-hmm. And we expect that trend to continue every single week through the end of 2021 as we comp COVID. And then finally, as you mentioned, we had to transform our cost structure during the pandemic. As we disclosed, we've taken out $360 million of costs. We beat our target last year by 20%. And, as we look at Q1, we announced Q1's coming in even better than we expected when we reported just 3 weeks ago. And so in our 8K, we announced that we expect adjusted EBITDA to come in $10 to $15 million better than we expected. So lots of highlights. Super excited again that we just had our best week for rideshare rides since the pandemic.
Right. And Brian, these are all really encouraging, optimistic numbers. But again, I just wonder what makes you so confident for the rest of the year when your chief rival said yesterday that he was going to be a little bit more cautious on the data that he's seeing. Are they seeing something different? Do you think that your focus on ride sharing amid the pandemic has put you in a better position for a recovery, for a reopening?
Sure. All we do is think about our transportation network. We wake up and go to sleep thinking about the U.S. and Canada. We have a very different footprint. And our strategy is, again, just transportation. And so it's ride sharing, it's bikes and scooters, it's transit. And we also then have rental cars. And so in January, we grew rides. Average daily ride volume grew 4% month on month. And in February, we grew another 4%. And if you were normalized just for the week of February 21st, we grew 5.4%. So we're seeing a number of helpful data points. And just to give you a perspective, if you look at Q4, October was the monthly peak. So October was the peak, then November, and then December. And we're seeing the exact opposite in Q1, where we've now grown, and we expect March will show additional growth in average daily ride volume. So we're feeling very good. And as we've said, we expect Q2 will be the inflection point, and then we expect much stronger growth in the second half of the year.
So Brian, still a focus on pure transportation, but have the events of the last year made you more or less likely to enter new markets?
Yeah, look, we have announced that we're exploring a pilot right now in B2B delivery, which is not consumer facing. But again, our mission, from day one has been to improve people's lives, the world's best transportation. And we think that is the best strategy. So we're going deeper and deeper in transportation. And again, we wake up and go to sleep thinking about transportation. So we believe we can out execute.
Brian, a lot's changed in the past year since you've seen this kind of pickup in growth. More people bought cars and started driving themselves that didn't have them. More people obviously worked from home and may still continue to do so. So how do you think about the long-term consumer habits that have formed over the pandemic and what it might mean for your business and potentially slower rate of growth than we've seen in the prior years?
So one of the data points that we announced in Q4 was that revenue per active rider hit an all-time high. So we have seen a new cohort of user on our rideshare platform. They're using ride frequency was quite strong in Q4. So I think what's important to understand, when we think about the rebound and the reopening in the U.S. and again, hats off to the administration for securing 600 million vaccine doses for the U.S. And again, our operating footprint is U.S. and Canada, so we're in a phenomenal position to rebound faster than other countries. But you have to remember, people have been just locked up in their apartments and homes, and we do expect that when it is safer for the economy to reopen, there's a lot of pent-up demand. There is nothing left to stream. No one wants to eat another meal at home. And so we do expect we will see a strong resurgence in demand as people can go back to their social lives.
Shepard Smith here. Thanks for watching CNBC on YouTube.